All right, today we're going to get into a number that pretty much shapes every major financial move you're ever going to make, your credit score. We're going to break down what it is, what dings it, and most importantly, how you can actually start the journey to make it better.
You know, the best way to think about your credit score is, well, it's like a map. It's a detailed guide that shows lenders where you've been financially, and it helps them guess where you're headed. Figuring out how to read this map is absolutely the first step to getting where you want to go, whether that's a new car, your own home, or, hey, just some financial peace of mind.
So to really get a handle on this map, we need to know what it's even charting in the first place. And at its core, it's a picture, a really detailed picture of your financial reputation. It's really just a three-digit number, right? Usually somewhere between 300 and 850. But don't let that simplicity fool you. That little number tells a really complex story about your habits with money. And for lenders, it's their shortcut. A super quick way for them to figure out, how likely is this person to pay us back?
And this slide, this gets right to the heart of why any of this matters. A higher score means lenders see you as way less of a risk, and that translates directly into better deals for you. We're talking lower interest rates, fewer fees. This can literally save you thousands, even tens of thousands of dollars over the life of a loan. It just makes your whole financial journey so much smoother.
Okay, so with any map, the first thing you have to do is find your current spot. You got to find that big red "You are here" dot. So let's figure out where you might be standing on the credit landscape right now.
That's the big question, isn't it? That three-digit number isn't just random. It actually places you into a specific category, and that's what lenders use to make their decisions.
So let's take a look. This chart lays it all out pretty clearly. Up at the top, in that 800 to 850 range, you're exceptional. Lenders basically roll out the red carpet for you. You're going to get the best deals. Drop down a bit into very good, and you're still in a great spot. But then, see how it starts to change? Once you get into the fair or poor categories, the terrain gets a lot tougher. Lenders start seeing you as a risk, and that means you're looking at higher interest rates, or they might just deny your application altogether. Knowing where you are on this chart is absolutely step one.
All right, so you found your spot on the map. Now let's talk about the warnings. You know, the parts of the map that say, "Here be dragons." Every good map shows you the dangerous spots, and your credit map is no different. Let's look at the most common pitfalls so you know exactly what to steer clear of. You got that right. And in the world of credit, these hazards are called derogatory entries. Think of them as serious, negative marks that can do some real damage to your financial reputation.
And here are some of the biggest ones. A collection account? That means your original debt was sold off to a collection agency. A charge-off? That means the lender just gave up trying to collect from you and wrote it off as a loss. And why do these hurt so much? Well, they're basically telling any new lender that you didn't pay a previous one. Then you have the really major stuff, like a repossession, a foreclosure, or a bankruptcy. All of these signal serious financial trouble and act as huge red flags.
But here's the thing you have to remember. These hazards, they don't stain your map forever. As you can see here, most of these negative marks will fall off your report after 7 years. A Chapter 7 bankruptcy, which is the more serious kind, that hangs on for 10 years. But here's the key. The impact of all of them fades over time. So time, plus starting some new positive habits, can absolutely heal even some really serious credit wounds.
Now, if you're trying to navigate some really tough financial terrain, it can be super tempting to hire a guide to help you out. But, and this is a huge but, it is absolutely critical that you choose the right one.
This comparison right here is so important because there are two very, very different kinds of guides out there. Over on the left, you've got certified nonprofit credit counselors. These are trained pros who work with you to create a real, practical plan. Then, on the right, you've got the for-profit credit repair companies. And these guys, they often charge insane fees for promises they can't keep, and sometimes they give you some really dangerous advice.
And here it is. This is probably the single most important thing to remember. A direct quote from our source material, "Credit repair companies can't do anything for you that you can't do yourself for free." Just let that sink in. They're charging you money for rights and actions you already have. So if you do need help, a certified nonprofit counselor is always the safer and more effective choice.
Okay, so you know where you are, you know the hazards to avoid, and you know who to trust for guidance. Now, let's actually chart a course forward. What's the real path to a better score?
First things first, and you just have to accept this reality. There are no quick fixes. Improving your credit is a marathon, not a sprint. Anyone who tells you they can fix it overnight is just not being straight with you. The journey to a better score is built on steady, consistent, positive actions over time.
So if you're starting from a pretty low score and just feel totally overwhelmed by debt, here are 2 really powerful first steps. Step 1, talk to a certified nonprofit credit counselor. They'll help you create that game plan we talked about. And step 2, they might suggest something called a debt management plan, or a DMP. This is where they work with your creditors to roll your payments into one single manageable monthly payment. Often with a lower interest rate, it's a structured, proven way to get yourself back on track.
And really, this is what it all comes down to, right? Your credit score isn't some final grade you're stuck with. It's a dynamic, living reflection of your financial journey. You have the tools to read the map, and now you have the knowledge to choose a better path forward. The next step? Well, that's up to you.